Hey guys, and welcome back to an exclusively new video on my channel Tradingfyive. And today in this video you are going to learn about a new concept in the breakout trading strategy, which is called as the false breakout. And I at least hope that you know what is breakout. You see, when the price breaks out of a strong resistance or a strong support, it is called as a breakout. And after a breakout, we expect that the market should either go in a strong uptrend or in a downtrend. So out of which we get a trading opportunity and we can make money. But in case of a false breakout, what happens is that the price gives a breakout, but after that it does not sustain it. That means the price gets back to the previous level where it was trading. It can even go below it, which can cause a big loss in the market. Let me show you an example. So as you can see on the screen, the price crosses a strong resistance and gives a breakout exactly over here. And apparently it even confirms the breakout by giving a retest on this resistance level. So all these signs indicate a strong uptrend in the price, and so it will attract more and more traders and make them buy the stock. But after that, you see the price didn't sustain above the resistance level. The price came back down and in fact went bearish. So this is a trap in the market which is set by the operators. And if in case you get stuck in this trap, you will surely end up making a loss. And this is what exactly a false breakout looks in the market. First you get a breakout, which will attract you and make you take a trade over there. But after that, the price won't turn according to your analysis. And so in this manner, you will get into this trap and make a loss. But today in this video, we are going to understand that how can we exactly identify a false breakout in the market, and majorly what is the difference between a false breakout and a genuine breakout. So make sure that you're watching this video till the end, do not skip it. And one more thing, if you are new to this channel or not yet subscribed to this channel, make sure that you do it so that you won't miss any upcoming videos or updates on the stock market, technical analysis and trading. Alright guys, let's start with this video. And let me first tell you that how can you identify a false breakout in the market. Now you see, there is like no indicator or no tool that will tell you that whether a breakout is genuine or false. But there are some methods, or you can say some secret techniques, that only few traders in the market know. These techniques are helping them to identify a false breakout and protect their money. So the first technique is using volume along with the breakouts. Now you see, volume is an indicator that will tell us the number of buying and selling which is done on a particular share and on a particular time frame. It is a really powerful indicator which we can use to find out that how strong and genuine a breakout is. Let me show you with some examples. Now as you can see on the screen, there is a chart, and over here the price is giving a breakout from a strong resistance. But notice how there is a rise in the volume when the price is giving a breakout. These high volumes indicate us that the breakout is most likely genuine and a strong one. It simply tells us that more and more number of traders are interested in buying the stock, and so as a result of which the price is going bullish. And you can see the price went in a good uptrend after this breakout. So this is how you can use volume along with breakout to find out a genuine one. If there are high volumes on the breakout candle, it is a strong breakout. But if there is a breakout with decreasing volume or sideways volume, it is most likely a false breakout and you have to stay away from it. This is another example as you can see on the screen. And this is a cup pattern, a cup breakout. And we can simply use volume to identify whether this breakout is going to be genuine or a false one. So you see the price gives a breakout over here and we have a very high volume on the breakout candle. So this indicates that this breakout is going to be a strong one. And this even got true. As you can see, the return it has given to the traders, which is like almost 1:5, 1:6 trade if you manage it properly. So this is one technique that you have to follow while trading on breakouts, that is using the volume. And let me tell you that the volume is the most overlooked indicator by most of the traders. Remember that price and volume, these are the only two things that the market has provided us. Rest all of the indicators are derived from them. So the price and volume deserves the utmost attention while trading. And you can use volume along with breakout strategy, even along with trend following strategy, and even with the candlestick patterns. I have made a video on it, you can watch it later. So the second technique to identify a false breakout is to watch the next resistance. You see, if the price breaks out of a resistance line, it is really important to watch where the next resistance is. Is it really close to your buying price or very far to it? And let me show you why you have to do this. So as you can see on the screen, there is a resistance zone and the price breaks out of this resistance zone over here. So this can be a genuine breakout and you can take a trade over here. But before trading, one thing you have to remember is to watch the next resistance. You see, we have the next resistance just above the previous resistance zone. So the chances are that the price will respect this resistance, and so it won't be able to give a breakout out of this resistance level, and as a result of which the previous breakout that you see will become a false breakout. So you always have to trade on those breakouts where either there is no next resistance or the next resistance should be very far so that you can book ample amount of profit. So the first step was to use volume along with the breakout, and the second step is to watch the next resistance. Now the third method is to use an indicator while trading on breakout. Now you see, indicators gives us an additional confirmation on our trades, and I personally prefer using RSI along with breakout trading. You can obviously use some other indicator like MACD or maybe super trend. It highly depends on you and on what indicator you are comfortable with. So you see, the price over here gives us a breakout, but this thing was actually confirmed by RSI way before the price gives a breakout. You can see over here the RSI crosses above 60 level, which tells us that the market is going to go bullish, and just after that we get a breakout on the chart. So we get to know that this breakout is going to be very strong. So we have to take a trade over here along with proper risk management. And if in case you want to know about RSI, that how can you use RSI along with breakouts and to improve your trading, I have made a separate playlist on it. So make sure that you check that out. The link will be flashing above, or you can check in the description. Alright guys, so these were the 3 important techniques that you have to follow before taking a trade on breakouts. And remember, risk management also plays a very important role while trading on breakout. You see, there might be a rare chance that you follow all this technique properly, but still the market doesn't go according to you. You may still encounter a false breakout, which will of course be very rare, but still you have to follow the risk management to keep your capital safe. Alright guys, so lastly, thank you for watching this video till the end. If you like this video, please hit the like button, share this video with as many traders as you know, as well as comment me down on what topic the next video shall be. And to not miss such many videos on the stock market, technical analysis and trading, make sure that you subscribe to this channel and press the notification bell. Alright, and I will see you in the next video.